everybody. This is Luis Morales with the Luis Morales Show. Welcome back. This is episode number 22. Today, we have a very special guest. His name is Roy. He's a licensed appraiser in Ventura County. And today he's going to be talking to us about, he's going to be talking to us about appraisals, how appraisers determine market value, and he's going to be answering some common questions to the show. Roy, how are you, Roy?
Thanks for having me on.
Appreciate it. Good, Roy. So the reason I wanted to bring you on in today's show is that I feel that a lot of the times homeowners or home buyers don't really understand how an appraisal works, or what are some of the things that go into doing an appraisal. So it's a very important part of the home buying or home selling process. So I wanted to make sure that people really understand this. So let's start off with what is an appraisal?
Well, basically, the simple answer to that question is an appraisal is an unbiased estimate of market value of a piece of property, whether it's a home or apartment or land. It's an unbiased opinion estimate of a piece of property. And that opinion is obviously based on comparable market activity in that market that the subject property is in. That's basically what we're looking at.
Okay. And can anyone do an unbiased opinion of what the value is worth? Like, can my cousin do it, or is it somebody that has certain qualifications, or what are some of the requirements to be a licensed appraiser?
Well, obviously, there's state laws. There's a trainee and that level that the California State Board establishes, and then there's the second step is just a California residential appraiser. That has other qualifications, and then from that, the third step is a certified residential appraiser, and those certified are appraisers that lenders use for homes, and then also there's the certified general, which can appraise both homes and commercial. Obviously, I have the certified general, so it's not anybody can appraise it a home. Obviously, the key word is unbiased and an opinion. Everybody has an opinion of a home, right? There's a seller, and then there's the buyer, and then there's the agent, there's a lender, and so there's a lot of players involved, but the appraiser is asked to do an unbiased opinion. So that's basically what it is.
Yeah. So essentially, what I'm grasping is there's different qualifications for different levels for the qualifications that an appraiser can have, and then their job is just to unbiasedly appraise the property. So let's talk about like some of the parameters that appraisers use to appraise a home, a piece of land. What are some of the different parameters that an appraiser has to go by in order to arrive at a value?
Well, ideally, you look at the property, the subject, whether it's a 3-bedroom, 4-bedroom, the age, and the appraiser then leaves the property and tries to get homes that are most comparable to the home that he's appraising. Okay, an ideal, perfect world, you can get 3 sales or more of the same type of home, size, room, count, condition, quality, age, those types of factors. But what happens many times is that there's either not enough sales, creates problems, or the sales that do exist in that market are quite different than what the appraiser is looking at. So the opinion starts to get kind of swayed by the differences between what's happening in the market and the subject. So, but ideally you try to it's a matching game, if that's the correct word.
Mm-hmm.
Match the sales to the subject home that you're looking at.
Yeah. So it's essentially, in a perfect world, it would be the same property. You'd be looking for like very similar properties. Ideally, what about with like more unique homes? Like, let's say that you can't find model matches or same
Right.
type of homes. Like, are you allowed to make adjustments for that? Like, if you're comparing a 2 bedroom to a 3 bedroom, a 3 bedroom to a 4 bedroom, uh, a condo to a house, what type of adjustments are you able to make in those types of situations?
Typically, these are kind of like rules of thumbs that are established by the appraisal profession, established by lenders,
Mhm.
these appraisal management companies. And basically, kind of the rule of thumb is like they like to keep the adjustments within 10% of the sales. Okay. So if you're looking at a home that's probably 500,000, and if you're using sales of 650, that's above 10% of what a property, say if it's an escrow of 500,000.
Mhm.
You want to get sales within 10% of that sale price, because if you go above that, it creates a little doubt in underwriters who review these appraisals. And if the appraiser does not explain why he did that, then the appraisal comes under question. Some of the areas that are, you mentioned custom areas like the beach areas in Ventura, Oxnard. There's a lot of custom areas in Ojai,
Mhm.
the hillsides in Ventura. Those areas are all homes that vary in age, size, view, proximity to the ocean, and in the case
Mhm.
of Ventura and Oxnard. So these types of characteristics can get really large if you don't have the sales. So to support or compare to your subject. So, but I would say if someone needed a rule of thumb, it's 10%. And you can go beyond that, but then it brings questions into the appraisal. Is he using the right appraisal? Why sales, and why did he do that? Okay,
So,
so
so, so not only in terms of price though, but it's also like in terms of like 10% in terms of square footage. Uh,
yes,
how many years up? How many years back? Like, if let's say the property is 1977 built, can I use a home in the 1940s?
yes,
Can
and
I?
then yeah, you can, but if an appraiser does that, then he has to say why. Are you using that sale because there's no other sale with
Hmm.
uh, that's comparable? Uh,
Hmm.
yeah, the other I haven't mentioned is the distance. Usually, lenders want sales within a mile and a half.
Hmm.
Kind of another rule of thumb. So if appraisers are going beyond that radius, then it raises questions as to why. The appraiser has to explain why he breaks these, not breaks, but goes beyond these parameters. And if it's not adequately explained, then questions come up as to the validity of the estimate. So it's a very subjective process sometimes when you don't have a lot of sales. And in a down market, that's kind of what happens. In an up market, it's just might be the same situation where the comps are just not there. A few years ago when the market was going really up, appraisers were having problems trying to get sale. Another element is bracketing. I don't know if you've heard that, but
Hmm.
lenders want appraisers to bracket the sale. So in other words, like getting back to the exact 500,000 sale price, it's in escrow. Well, lenders want the appraiser to a sale below that 500,000, and they want a sale comp recent above that 500. And they don't, if an appraiser gets sales all below the sales price, the question that is asked many times is like, why are you appraising the subject
Higher than that.
higher than all the sales? Okay. So that's, they call that bracketing. So, but sometimes appraisers can't get that bracketing process because there's not a high sale, especially if the property, it's an old property and say it's been renovated. The seller poured in 150,000 to it, and it sells high because of that. Okay. And he can't get the sales to above that sale price because it's like the cream of the crop, right? As long as the appraiser explains why he can't get a sale above that, then it more than likely will pass. But I mean, if there's no explanation to it, creates problems. Okay. And realtors, should understand that rule, because if you get way too above the market, then the appraiser is like, he's out, he can't justify it, given the parameters that we're talking about, and then, it creates problems on an pending escrow.
So essentially, even if you can find a buyer that's willing to pay more for the property, sometimes you may run into an appraisal issue. Now, here's what I've seen. An appraisal is subjective, meaning it's an opinion.
Yes.
So different appraisers, and correct me if I'm wrong, can appraise the same property and essentially come up with different values based on what they're opinion. So typically what I tell people and customers, Roy, that an appraiser is an opinion of value. And
Yes.
because somebody says that, or one appraiser says that the property is worth much, that is subjective, because another appraiser can say that the property is worth a different price. Like, I'll share this story with you. I had a property that in a 6-month period was appraised 3 different times. One of them at $875, one of them at $825, and the other one at $899.
Wow.
And I tell people this story because I tell them, I said, which appraiser is right?
Right.
So sometimes, like, the way that I look at appraisers too is that an appraiser is what somebody's willing to pay, or what something is worth is what somebody's willing to pay for it. So if somebody's willing to pay the $899, I mean, that might be where the value is. The only problem is, can you back it up with an appraisal?
Right.
And an appraisal use the parameters that they're given by the lender.
Yes.
In at that price, and in some cases they may be able to, in some cases they're not. So what I wanted to do is I wanted you to share some rule of thumb. Like, let's say that you're going from a 3-bedroom to a 4-bedroom. Is that like let's say you're picking the subject property is a 3-bedroom or a 4-bedroom and you're using a 3? Can you make an adjustment there? And what would be a rule of thumb for that? Like, how additional can you add?
Yeah, the rule of thumbs on these, and I use the word rule of thumb because the market, say for Ventura Hillside, is different than Ojai, and Ojai and Ventura is a lot different than, say, Conejo Valley. Okay, so, but just to give you an idea, bedroom count, you're probably talking maybe in the low end of the home market, probably 5,000. Maybe I've seen it in Conejo Valley where, the price difference between homes, one bedroom, is probably 15. It's amazing. It's just like a pool in Ventura, Oxnard, maybe 8 to 10, but in Ojai, 20, or Conejo Valley, 20. And regardless, and this is value versus the cost. I mean, you can spend 50,000 or 75,000 on a pool, but it doesn't bring an equivalent increment value to the property of that cost. Okay, so but bedrooms can range anywhere 5 to 10,000. Bathroom remodels, probably 10 to 15, and maybe more for higher priced homes. I found in my experience that the higher price markets, say 900,000 to plus, a bathroom remodel is like probably worth 25, 30,000, and a kitchen even more, a lot more. So it depends on the market location, the price, and the price market, the price level. But if anything, I would another rule of thumb I think the rule of thumb would be for realtors to consider like 50% of the cost. Okay, a homeowner can say, well, I spent 100,000 on 2 bathrooms and a kitchen,
Mhm.
and then you're trying to say, okay, what am I going to list this for? What can I justify?
Yeah. Yeah.
This borrower, I mean, this seller spent 100 grand. Well, I would start at 50,000 and start to move up once you review the sales in the area. And, it gets back to what we talked, Jose, earlier. You don't want to go too much past that 10% if there's not high sales above what you're expecting to list the property. Because then you're going to possibly looking at an appraisal problem that you spoke about earlier. But, the thing that I think people should understand is that for lending work,
Mhm.
banks look at what is the predominant buyer going to pay for that property. Of course, there's buyers that get emotional and say, "Hey, it's worth $850, but I don't care. I'm going to pay $890."
Mhm.
Okay, fine, but you have to look at it from the people that are funding that loan. They don't they want to take the middle of the road. They want to be secured in what they lend, and that's where you get these differences in appraisals. I mean, if 2 appraisers went to the same property and appraised that property, and they did, a reasonable job with reasonable comps, they should come pretty close. Maybe not exact, because this is not a science. It's not like we got a computer program that, you put in all these numbers and then it spits out a value, right? It's all a subjective, unbiased opinion. Um, I've been doing this long enough, and I've used this very simplistic example. When people say, "You like being an appraiser," or that, and I'd say, the appraiser is like a referee at a baseball game. You got to call him just the way you see him, and there's 2 teams. There's in dugout, and there's players,
Mhm.
and all these people have certain interests in how this deal is going to be made. Okay, but an appraiser has to be unbiased, as we started to say, and objective, and just try to do the best job you can and be reasonable. But still, you get people questioning, like, wow, why did he do that?
It's really interesting because I've had properties, Roy, that I'm thinking it's a slam dunk. It's gonna no problem here, and then they haven't appraised. And then I've had properties that are like, oh man, I'm kind of worried about this not appraised, and then it appraised. So essentially it's really interesting how that works. Uh,
Yeah,
Not only that, but I think that it has a lot to do with pricing a property, taking a look at what the features and benefits of comparables have, because it's very rare that two properties will ever be exactly alike. What I
right,
mean by that they're all going to vary a little bit based on square footage in most cases. They're all going to vary based on lot size. They're all going to vary based on condition, and they're all going to vary based on location in the community. So you could take a property that maybe backs to a main street, like a road or keyword that is a busy street, and sells for less, where you have another property that is in a cul-de-sac that is in a much better location. So I think where appraisers come up with different values is the adjustments that they make for those items. And
right.
I think that just having somebody that sees those items and make the right adjustments And it's more, when a property is like a tract home and it's pretty basic, like
Yeah.
1,500 square feet, 1,400 square feet, I see that the value difference in the appraiser may not be that much. But when it's a little bit more custom home, like
Yes.
the beach or the sand, that's where appraisers can make significant, drastic, different opinions in regards to what the value is. Because as you know, on the beach, if you're a block from the water, it's
Yeah.
different than if you're 10 houses from the water. If you're on the sand, it's different than if you've got so all of those adjustments that have to be made in that case. And also from you is that different appraisers or different features and benefits demand different adjustments in different areas.
Yes.
And I learned that as well too, that is the case. In Ojai, maybe to pull in Santa Barbara.
Yes. Right.
So I
Exactly.
think that's important for the consumers to know that it's also based on the area. You hit the nail right on in regards to cost versus actual value. So essentially, if someone has put $100,000 into the property, would it be safe to say that they're probably not going to get all of that money from an appraiser?
Yeah, Jose, I think that's the right assumption. I mean, I know sellers don't like to don't like to hear that, but I mean, it's not a dollar for dollar, you know, I mean, it's not a dollar equivalency. Okay, and there's cost and then there's value, and also, especially if it's several years go by, you know, say the seller says, "Hey, I poured 150,000 here 4 years ago, and now I want $150,000 back." You know, and in a down market, that was the problem in 2007. Some of the problem where people bought high and you know, they poured a little bit of money, knowing, you know, hey, next year it's going to be worth 10% more, so I'm going to do a room addition. But when the market turned down, they had already expended that money, so they expected their value to increase the same amount, but that didn't happen, and so people have to be kind of careful in that respect. A cost does not equal value. Okay, that's
But in terms of preferences too, like some of the upgrades that people add sometimes may not be the same preference that a buyer 7 years may like, because
right.
patterns,
Yes.
different taste. People have different tastes over time.
Right. So I mean, it's one thing that we have is uh, an appraiser needs to stay, you know, like I don't know how it is with the realtors, but appraisers, I've been practicing for over 30 years, and I stay in Ventura County. I mean, I don't go to Santa Barbara or I don't go to Santa Clarita because I don't really know those markets. But I do know the Ventura market, and I know the Ojai Valley market is different than the Conejo Valley, and it's different. And the beach areas in Ventura County are a different market. So, but I think what appraisers get in trouble, and I know realtors, if realtors had to suggest who should appraise a property, it should be somebody that's local, that lives, maybe not lives in the same city, but within close proximity. Because I mean, I'll be honest with you. I mean, I've seen appraisers for done in Ventura, and the guy's from Huntington Beach. I go, wow, that's that's unusual. You know, I mean, unless he has some secret connections, I mean, that's tough to do sometimes in the appraisal aspect of this, you know, real estate. It's very tough, you know.
I think the reason it's tough too, because I mean, a value of a property can change from one street to another. Like you look
Yes.
at and you look at North Oxnard, you look at Oxnard Boulevard on this Colonia on the other side is like the dealer. So it's kind of like if you're out of the area, you may not know that those aren't apples to apples comparisons, that you may have some adjustments.
Right.
I think that's why it's right on the head that it's important that an appraiser gets actually knows the area. Now here's the question: who's the appraiser? Like, how does the real estate agent select the appraiser?
Yeah. Well, Jose, in the olden days, wherever the appraiser just knew the lender, right? So go, here's the address, go appraise this property in Ventura or Oxnard. Right? But, after 2007, came up with all these rules. And as you know, that decision was taken away from all the parties except for this appraisal managements. And not so they picked the appraiser. Now, this is within the appraisal profession. This is controversial and a lot of different opinions, but the appraisers that are being selected, sometimes, as I say, they might not be knowledgeable of the market, and because the decisions are not made by the realtors or other appraisers, by referrals or lenders per se, you get into these aspects of appraisers appraising in markets that they don't have a whole lot of experience in. So it causes a little bit of a controversy there. The other aspect in the olden days, prior to 2007, realtors and appraisers used to kind of like share information, right? Now they came up with this rule where it's kind of like frowned upon, but I would encourage realtors. There's nothing unlawful or unethical for a realtor to go to an appraiser and say, look, this is my listing, and here's the comps that I use to list this property. So, and the appraiser can take that. I mean, it doesn't mean that he's going to use them. It doesn't mean that it's going to guarantee, no issues with the appraisal, but it does give the appraiser the option to say, okay, I'm going to look at these, and he makes his judgment when he makes his report. He makes the decision of which comps to use to support value. Okay, so, but as of now, it's kind of tough because these appraisal management companies are the ones making the decisions. And, and sometimes these appraisal companies, there could be in Dallas, Texas, out of state. So it's a little bit of a problem. I know lenders and realtors and people in the business, it's a little thing that the issue that they've had to work around, but that's just the reality of where we're at today.
Well, I think that one of the reasons, just so the consumers have an idea, this was changed after the real estate crash, and it changed. It was the consumer, meaning that purchasing property. What they wanted to do is they wanted to so they could hire their buddy who's appraisal.
Right.
Hey, look, can you make this property appraise at 50? Because we go there all the time. So, Dodger game, because I know you might need more, and so that you understand. So the lender through a third appraisal manager,
right?
Company selects. So essentially, the goal behind it was to make it even more of a process. As you guys can see, there's some problems with it. What was kind of was that properties maybe in neighborhoods not. The other thing that earlier that going up, like for example, 2012 started down, sometimes this is going up. As sales back here, it's very difficult to get into appraise and run into appraisal issues. Properties are faster than what previous properties sold at.
Yes, exactly.
The market is going down. Sometimes appraisals will come in higher than
Yes.
what the marketplace is. So it's really interesting when the inventory is very low, the market may be going up, and then you may run into appraisal issues. You've got 10 buyers bidding on one property, driving the price up. So how does the appraiser make adjustments for that? What are they allowed to do versus what are they not allowed to do?
Well, the appraiser, when the market is going up like that, the other thing is, the lenders, they want sales within 6 months. And in some cases, now recently in the last few years, the lenders will now ask as a standard request, include 2 listings, because they want to know where the market is going and where those active listings that haven't sold are listed at. What they want to do is kind of like, okay, so if the sale price on the subject is $850 and there's a comparable property that is not a sale, but it has been listed at $910, but it's been on the market for say 8 months, and the appraiser appraises it for say more than the list price, the lenders or a review, in other cases, an appraiser reviewer will say, well, why are you appraising it a little bit more than the sale price when you have 2 listings that have been on the market for 8 months or some long time and they're not selling? So that's in an up market. Okay, so but what happens also in an up market is that you can have something go in escrow for $850, and like we discussed, it could be the top sale in the whole neighborhood, right? All the sales are $780, $810, and you have your listing at $850. So right away, it raises the question of, oh wow, are you over and appraising this? Because the highest sale in the whole market is $810. And you have this one in escrow. You got to explain, is it, and for a comparable home, there's not a whole lot of difference square footage, assuming, everything's pretty similar. But then, like realtors will say, well, that's the market. People want these homes more than they wanted them 4 months ago. And let me get this here. So that's the predicament that happens in an up market. Okay. And that's why I say that I use that 10% figure. If a realtor is going to list a property 20 or 30% higher than the highest sale, you got to expect that you're going to have an appraisal problem, unless you can justify, because maybe
size, better
view,
and view,
larger square, new remodeled, or a pool. But if it's basically similar to all the sales in that last 3 or 4 months, and you listed 20% more than any closed sale, I mean that's an invitation for falling out of escrow. I mean that's.
Let me ask you a question. So I was told by an appraiser one time that there was a form that you're going to make an adjustment time, that there was a form that is used on all appraisals. I think it's like a Freddie Mac May 10 form.
Do you mean the form?
It's like a report on the MLS, Freddie or Fannie report.
I'm not familiar with that. I know the standard form is Fannie Mae Form 1004.
Something like that. I think that's what it was. It can't tell you, but there was a report that's meant to tell you trend is going up or
Yes. Yeah. Oh, yeah. That the appraiser is forced to say which way is the market going up,
yeah.
and what is the predominant value, and what is the value range. Okay, so that's another catch. They want to make sure, and those are recent, like probably I can't remember which year it was. It was pretty recent where they really started to nail that down because they want to get away from what we were talking about. A listing at this high at say 890 and and hasn't closed, and you're appraising something at close to that.
Let me ask, how does an appraiser look at a property that's been sitting on the market? Like, why do properties sit on the market for a long time?
Why they're overpriced. I mean, it could be something. It's funny, to be honest with you, Jose. I get calls from your fellow colleagues saying, "Roy, I need you to do a private appraisal just for me." And I go, "Oh, really? Okay. Why?" He says, "Because the homeowner thinks the property is worth $1.5 million." And I said, "Well, why don't you list it $1.5 million?" He goes, "Yeah, but the highest sale is $1.1 million, and I don't want to take the listing for $1.5 million and have it sit there for a year and a half." And I go, "Oh, okay, well, so I go out there, and this is actually a true story, but the numbers have changed." But anyway, I go out there and go look at the property, appraise it as if, what's my honest
Opinion as to what it's worth.
of what it's worth. And I tell them what it's worth, but I also give them a range. I said, look, it's worth 1.1 or 1.2, but I mean, if you want to list it for 1.5, maybe you're lucky that you can get a buyer. But even if you get a buyer for it, you got to tell the seller could have problems in escrow.
Appraisal.
So that's really, a tough situation sometimes to be for appraisers because, we have to kind of be a bearer of bad news sometime, or not news is, but if realtors can, I think if you can understand that no matter who does the appraisal, there's always and this is after my experience, based on there's always a range. I mean, I can appraise a property for $850, right? I know even if I appraise it could probably be worth $870, or it could be worth $835.
Mm-hmm.
And if an appraiser went out there and appraised it for $8, I wouldn't say, hey, he's wrong or something. It's because the appraisals is just it's not a science. It's not where we put it in some mathematical formula and come up with a value. Okay, it's a subjective opinion based on market data, and that's sometimes it gets really tough, especially when you have a changing market and a market where you have differing properties. Some of the most difficult areas in Ventura would be the beach areas that we talked about. Ojai is very, very difficult. The hillsides up in Ventura, another difficult area, and I'm sure realtors have a hard time listing properties in those areas because it's everything's different. There's a lot of characteristics that you have to consider that impact listing and value. So areas in Ojai, or Canal Valley rather, are very difficult. Up by North Ranch and stuff, you have very luxury homes over there that vary in quality and size, and it creates a challenge to appraise it. And I'm sure listing properties, it's very difficult.
Yeah, where I see it creates the bigger problem is on more unique properties. That's where really, or unique areas. That's
Right.
where, as a listing agent, sometimes you run into problems in regards to value. So, I mean, I can give you an example. I mean, it's over range. Not only that, but it's as well too. So, my rule of thumb is you try to get it in the range.
Yeah.
Value is, and you let them decide what the actual market value for the property is.
Right.
Market will let you know. So if your range says 550 to 570, the best offer that you get is 530, that is market for the property.
Yeah.
If
Exactly.
in 550 and you get more offers at 570, that's the market responding. So in a truly competitive market, as long as you expose it to the right people, expose it to the market, the marketplace will dictate what the value is. Now, the only problem is that if the marketplace is worth 600 and an appraiser can't justify that through the analysis, through the comps, you may run into in appraisal.
Yeah, yeah, that is a problem. So,
Yeah.
I mean, and it's a common problem that exists, but I think if people, all the parties involved, agents, loan people, appraisers, they understand this is what's happening. It's not that appraisers want to undercut a listing or anything. It's just and since 2007, I think appraisers have been under more scrutiny and parameters than they like, because the lenders are asking for these requirements that we've discussed, and sometimes they're not realistic with the market. Okay, but the appraiser is locked in because he can't go outside those parameters, because if he does, he exposes himself to, like, maybe the deal not going through or the appraisal being rejected. Okay, so it's a tough situation. I know probably a lot of appraisers don't like some of these rules, that we've discussed, but that's the reality of the way it is right now. Maybe it'll change moving down, but I think some of the rules are reasonable. Other ones are, maybe are not.
Is there ever a time where you think that a property is worth what the appraisal value or what the contract price is? Let's say that the contract price is 800,000. Is there ever a time you feel that it is worth based on what you've been able to see? But unfortunately, because of the lender parameters, you can't really bring it in.
Yes, exactly. Wow. There's a situation. I've been in that situation, and the parties get upset. They call you and say, "Hey, what's the problem here?" I mean, God, we got an escrow for 4,800, and we got, you're only appraising for 780. We're off, or the escrow is going to fall out, or and then you have to tell them, well, look, you listed it pretty high, and I'm under these constraints of 10% adjustments. Got to stay within 6 months. I got to stay within 1 mile radius. And of course, the listing agent will say, well, use this comp. Okay. And obviously the comps, like maybe 3.5 miles away, or is 40% bigger in square footage. And the appraiser says, well, I can't use that sale, because if I use that sale, they're gonna throw it out. They're gonna not throw it out, or just say, why are you using that? That's not comparable. It's 3 miles away. It's 40% bigger in square footage. Get something that's closer and more similar. So, that's a predicament that appraisers have. And that's why I think if realtors understood that when they list the property, they're conscious of that issue that appraisers have to work with. That you're looking down the road at possibly an escrow falling out because the appraisal just doesn't come up to the sale price. And like as we talked, it's quite often with the upswing in the market that happens quite a lot, more than probably.
Or you can't just justify it.
No, you can't. And so it's a difficult time. I think right now, the market's kind of leveled off a little bit. We don't have too much appreciation or upswing. So unless there's a lack of sales activity that makes it difficult to get comps within those, like 1 mile, 6 months, 10% adjustment. If you can't get comps in that area that fit that, then you could have a problem. But I think listing property, you guys, realtors have a tough time when you have, you're dealing with sellers and a market that that may be changing where, sellers say, hey, I hear it's hot and I think I can sell my property. I want you to list my property for 950,000. Well, the highest sale is only 890. I mean, how do that's a difficult, that's as a realtor, as an appraiser talking to a realtor, I see that predicament, I see that. And so it's a hard thing to, sometimes I tell my realtor, well, hopefully I don't get that appraisal because, that's going to be hard to justify. But
Yeah.
that's just a predicament, the world we live in, I guess.
But let me ask you a question. In your opinion, what makes the prices go up and what makes the prices go down?
Probably the overall economy and to me, I've seen the employment.
Mm.
I always, over the years, I've always kept an eye on the employment. When the unemployment rate starts to increase, the market is going to get weak. And and in the cycles I've seen, there's been, like, even in Ventura County, there was in the 80s, there was a lot of overbuilding, and then people the employment jumped up. Mortgage rates in one of these downturns were 20% to get a first TD. This was back in, I think it was about 80, 82. To get a first TD, trusting was 20%.
Wow.
Amazing, and of course, if you have a normal job, you're not going to be able to afford that. Yeah. So, and they didn't. So the market went down, and but the builders kept building. Okay, so that was a different scenario than what we saw in 2007, where people they did these subprime loans with, and the subprime market was all based on appreciating market.
Yeah,
they would give you a short-term loan for 3 to 5 years, saying, well, come back in 3 years because your home will be worth 30
more, and you can refinance it.
Yeah, and you can refinance.
Until prices started to drop, and that's when people, obviously they couldn't refinance out of those, and then they got into loans that they couldn't afford.
Right.
I think that when it comes to the marketplace, it's supply and demand. How much demand is there for the product, and how much supply is there of that product? And depending on the level of supply, depending on the level, that's what will make the prices go up or down. So if supply and very little demand, prices will go down. If there's very little supply and demand is really high, that'll cause prices to go up. So taking a look at the supply and demand levels, how much supply is in that city based on how much demand, how many people you're selling, will give you an indication of where it is, whether the market is going to be going up or going to be down. So for consumers, it's important to look at the numbers, and for your agent to have that information as well, too. So, do appraisers ever require certain items to be appraised, or you prepared prior to the appraisal? And what are some of the items they do?
The items on the home, I think you got cut off a little bit, but I think as far as inventorying the property, is that you look at the condition of the property, the upgrades, the design of the property. Sometimes you can walk in the house and say, oh wow, this is 1980s. All obvious, right?
Yeah.
And then you walk into other ones and you say, oh, this is pretty recent. So I think those are the key things that people look at. I mean, obviously, people say the biggest increase that a owner can do to his house, I think, is a room addition versus not so much a bathroom or kitchen, but you can add a fourth bedroom or enlarge your family room. and add like 200 square feet. And you can do that for a reasonable amount of cost. And therefore the square footage is bigger, and that has a bigger impact than say a pool or even a bathroom relative to the cost. Okay. So a pure room addition is lesser cost, and you can increase your value in your home a lot more than say adding a third bedroom or third bathroom or fourth bathroom or something. But I see those as being key. But uh, you know, it's difficult in a market where I see demand. I see there's always supply and demand, but I think the demand is always tied to employment. So like right now, I think we have good employment, right? It's down, but I think the key that I think people are noticing now, even though people have jobs and they want to own homes, they're not making the type of money that would get them into a home in Ventura County. So it might be a delay reaction where you work in a few years and save your money, and then they have enough to qualify or put down. But I think that in this current 2019, I think that might be a problem. So, but for sellers, I would say, if you can just keep your property, up to date, um, looking, pretty, not any conditional problems or condition problems. I think that's the best thing homeowners can do for their homes, without spending a whole lot of money, and just letting the market generate some appreciation or in the price. So and if the market goes down, they haven't expended a whole lot of money to stay there and live there, and so I've seen my home. I've lived here in Camarillo. I've seen my home go up and down over the years, but it's always been more. So I mean, it's gone down for a few years and then it goes back up and then it drops down. And I tell homeowners, just don't look too much at the market. Just pick a nice home, uh, stay there, enjoy the area, and just ride the market. Ventura County is a good market. It's a very strong market, I think. And the fact that everybody wants to live here pushes the prices up. So anyway, we'll see. I think it's an interesting time here, but appraising is a lot different now than what it was probably prior to 2007. And if I had to say anything to realtors, just understand the appraisers are under more scrutiny and constricted than prior years. I mean, when I got into the business, I mean, there was no restrictions as to, we just got the best sales, put them down, and that was it, but now, you have the lenders are really putting these restrictions on us, and to a certain, some of them are good, and they've improved the profession, but other ones are kind of like not realistic to what is really.
Give us an example of something that maybe is a restriction that's not realistic.
The parameters, like 1 mile or 6 months. I mean, sometimes when when you have a 1 mile radius and there's a comparable, like say in Ventura, East Ventura, there's developments out there built in the 70s that are more than a mile away, but they're almost, sometimes they're the same builder. So he builds one project here in say 1990. There's 50 homes here, and then he goes 4 miles down and he builds the same product, same exact home, different. So an appraiser comes in and he appraises in one of those tracks. So, but he in a what they call pocket tracks, where say he puts brand new homes, and all the homes around there are built in the 60s, but this one was built in 1990, right? So is restricted by you seeing the sales in that neighborhood. But he's, when you look at it, you say, God, I don't want to use this 1960 home to appraise in 1990. But here's a tract here 3 miles away and further east in Ventura, the same builder, the same models. So I'm going to use that. He puts it in a report and he tries to say, well, this is beyond a mile and a half. And the lender said, no, sorry, we don't. That is, you're trying to inflate the appraisal. That's what my experience. You're getting sales outside the market to appraise something that's here in this area. You can't do that. Use sales within that neighborhood. Okay, so that's where some of these rules kind of they fall off the train, so to speak. And the time element too. If the market is up and coming down or changing, that 6 month is. I've done appraisals where I used like an 8 month year old sale, and the lender say, nope, I'm not going to take this appraisal. Go use a sale that's within 6 months because we're not taking one that's 8. Okay, so it's a difficult situation. So sometimes they force the appraiser to use comps that he knows
don't reflect the fair market value of the property.
Yeah.
But I think for a listing agent or a realtor, it's really important in some of those parameters that appraisers are bound with. That way, when you're determining at what list the property at, you can take some consideration. I'm going to be honest. I'm so glad in appraisers as a real estate. When I'm the value of it, I don't have the same strengths that an appraiser has. Like, I'm really looking at all the information. So I'll give you an example. I was doing the value of 1,000 Oaks, and it was last 6 months, it wasn't 16, it wasn't a lot of that neighborhood. I went back 1 year, property next door in 30,
Yeah.
exact model, exact is, and that happened in 2017. So in my first, it was the market in 2017 in comparison to, like, has the improved, marketplace worse. And based on that, we make recommendations as to what the value of the property actually is. It's the same model match, same finishes, directly story. I believe that's comp for the property. The problem is that an appraiser may not be able to use that comp. It may be forced. It was like a market of 8 homes surrounded by nothing but 1960s, 1950s homes. So that's when it becomes a lot more difficult to appraise the property because you've got the constraints of those sorts of things. So I'm glad that I don't have to deal with those constraints. It's important for me to understand those constraints because whether I'm dealing with it on the marketing aspect of it or I'm dealing with it while I'm in escrow, I know that if I list the property at a certain price and we're getting financing, I may have to support that price, or I may have to go to the appraiser and say, look, this is the value of the property. Let me ask you this. If there's 10 offers on a property and the property went at 550, and the highest sold property at 500, can an appraiser use the fact that there's 10 other properties in the property, go bank to the bank and say, look, this property is worth 550. We have 3 offers at 550. I know the highest sold property is 500, but we have 3 people willing to pay that. Can an appraiser use that to buy a higher value?
No. I don't. No, I mean, to be honest, the appraiser on a purchase gets a copy of the purchase agreement, and but he only gets that purchase agreement. He may know verbally that, hey, there's other backup offers and stuff, but the lender doesn't want to. The lender won't give credence to the fact that there's like 5 other backup offers that for that price, right? So I mean, it sounds reasonable. It sounds like I'm sure you can find. For me, and maybe some other appraisers, we would say, "Hey, man, that's important information. That impacts the value." But there's a lender someplace somewhere that's going to say, "Sorry,
Well,
no, we
you
don't
know,
we don't buy it."
as a listing agent for me, because I've had appraisal issues multiple times, and
Yeah,
in my head, I've created a process of how to deal with them, and that process involves understanding the same parameters that the appraiser uses. Because
right.
if I go back to the appraiser and say, "Hey, why don't you use this comp that's 500 square feet bigger?" The appraiser would say it doesn't match within 10, 15% of the
Yes,
of the of square footage, therefore I can't use it. So as a listing agent, it's important to understand what parameters they can use because that will help you build up your case. Uh,
yes,
and it's easier to to to, to have a conversation with an appraiser or
yeah,
say, "Hey, why wasn't this used versus this one? Or this may be a better." Like I had an
right.
appraisal issue 3 weeks ago where there was property, there was literally a property that was 8 doors down that
Mm,
sold at a higher price, and the appraiser used the property a mile out. And I was like, why use the property a mile out versus the property that's 8 doors down? And he said that because there was a convenience store in front of this, it made it a substandard home because it was right in front of the market. But what I challenged him is I said, why don't you just make an adjustment for that? Why don't you
yeah,
make an adjustment down and you it's 8 houses down? In
mm,
the end, we didn't like that too much, but we ended up getting the result that we were looking at.
yeah,
That's where I try to get people to understand that when it comes to an appraisal, it's very subjective, meaning you can get 3 different appraisals at 3 different prices.
right.
You can get some that are higher, some that are lower. So it's important to really um, have someone that knows what they're talking about, that understands the neighborhood, that can select the right comps. Let me ask you another question. Just because an appraiser says that the home is worth $1 million, and let's say the highest offer is 900, I mean, does that mean that the home is worth $1 million? The highest offer is 900.
Uh, well, you know, when you get into a market like that, the way I do them is I try to parameters of whatever parameters an appraiser is working on in that situation. I try to put all the sales that I can put on. I mean, obviously the form they were talking has 3 sales, but really in a market, uh, a value is determined by more than 3 sales. I mean, you got to look at 5 or 6 or even 7 sales, and you put them all down in the report. And some of the sales won't fit the parameters, like in the case you just said, of what the lender wants. But still, if you put them on there, I tell her, put them on there and make the adjustments. Okay, so they're going to say, well, comp number 6 is like, boy, why did you use that? You know, but still, as long as you put them in the report, make reasonable adjustments, they can support maybe the value that you're looking at it. 900,000. But even if they criticize you for using that one sale, I mean, you got 5 other sales there that if they are also support the value, then that once you adjusted that one sale that maybe is doesn't fit their
Parameters.
yeah. Uh, but
How many sales do we need to have? Is there a minimum amount of actives and a minimum amount of solds that are on the report?
no, I've seen reports where there's 7,
One
8.
comp.
Yeah, one.
Really? Is there a minimum amount? Like, can an appraiser just say, "Hey, look, there's one property that's a comp, that's the best comp. These are the adjustments. This is what the value is."
Yeah, I mean, the form is 3, ask for 3, right?
Mhm.
But the appraiser has there are addendum forms to Fannie Mae that allows the appraiser to go 4, 5, 6, 7. I've done appraisals where I've had seven comps because I knew that there was going to be a big issue of unbelievability if I didn't put 6 or 7 comps versus just 3. And so you're kind of like building a case, so to speak. So when a realtor goes out and lists a property, he hopefully he understands, like the 10% or 15%, the 1 mile, the 6 month, the bracketing, and sometimes the bracketing can be like, I do some work for one lender and they will not, this very, very, I mean, to me, it's not, I don't think it's important, but they have a requirement that you have to bracket the sale with square footage. So if you have a home that's in escrow at 1,600 square feet, if you use all comps at 14 and 15, they'll throw it out. They'll say we reject it. And they want bracketing on the square footage. They want 1,800 square foot home at 1,700 and something close to the subject and maybe something small.
Sometimes there may not be enough sales to provide all that information.
Exactly right. And then so you get on the phone and say, hey, get on my email and say, hey, we got a problem here because I can't bracket this based on square footage. Now, do you want me to go back a year and get one that's can bracket? And they go, oh, no, that's past 6 months. I'm going, well, see the predicament, the appraisal. So they don't let you go back 6 months to meet a different parameter for square footage. But so your appraiser's caught in between. What do you do? I mean, it's a difficult situation that in the olden days it wouldn't even matter. You just use the best sales in that neighborhood. But you have these other parameters that puts a lot of restrictions on.
Well, I think what's important for the consumers to understand is that there's different lenders that are going to have different parameters, and those different. If a lender has parameters that in some cases may be unreasonable or very hard to meet, that may be happening. So sellers, not only do you want to select the best offer, but you want to select the lender, or if the buyer's using a lender, it's easier to work with parameters versus somebody else. That's for buyers, you want to make sure that this is not going to cause an issue, because sometimes if the lender has all these extra parameters, it may put in the way of a deal happening, and it may not allow the seller to sell the property and the buyer to buy the property that they want. So there's a lot more than just, hey, look, like, this is what the property is worth. There's a lot of stuff that goes into this. For the consumer, it's important to know that a lot of this stuff happens in the background.
I think another thing is, like, you can appraise the property. It's almost like, do I appraise the property for what I truly think it's worth, and that's one value, or do I appraise this property based on the parameters that are placed on me from this lender? That might be a different value. And that's a tough one to, that's where arguments come.
Or in some cases, some appraisers, I'm not saying this about you, they could say, do I appraise it at the value that I think is worth, like, really? But I'm likely gonna get the kickback, and they're gonna make me justify it, which is gonna lead to triple, quadruple the amount of work. Or do I just come in with their parameters because I know that otherwise they're gonna take it back, even though it may be a lesser value?
Yes, exactly.
And this is a good point, because whenever an appraiser gets kicked back, does an appraiser make extra money on a revision, or it's extra work for them?
No, it's just most of these appraisals, you just get a flat fee, and it doesn't matter if you have to go out there 2-3 times or use 3 comps or 13 comps. It doesn't really matter. So there's no extra, financial
fee for. So if an appraiser sees that it may be extra work, they may just try to match the parameters, even if they feel. So what I'm getting from this conversation, even if a property may be worth more, the appraiser may not be able to justify, and that's where you have some issues. So
yes, exactly.
As a real estate agent, your job is to know the parameters that they have to use and build a case to help the appraiser and help everybody realize that that is the value of the property.
Right.
In that property that we had the three different appraisals, 875, 825, and 899. 899 was our contract price, and I fought it till we got the 899 because what something is worth to me is what somebody's willing to pay. If there's somebody willing to pay the 899, and that's what the value came back at. That's what it was worth. But it's just understanding the different parameters that they have to use and presenting them with information that matches those parameters. So I want to end the call. It's been extremely helpful, at least for myself. I hope that it's helpful for a lot of the viewers out there. Roy, is there anything you'd like to add?
I just, I've been doing this a long time, and if I have any advice for appraisers and realtors listing or selling, is, we're all kind of in this old boat together, and I think if we understand all the rules and restrictions that we're under, and we're all trying to kind of make these deals work, and sometimes because of the rules and restrictions that we can't make them all the time, but I think if we can exchange the information, I encourage listing agents to give the appraiser, when they meet them out there at the property, give them all the information you can possibly give to them. They don't have to take it. You're not breaking any rules by doing that.
So there's no law that says that I can't give an appraiser some comps.
Yeah, no. In fact, in the deals I do, I encourage. I've been part of multiple for a long time, but I tell appraisers, yeah, if you want to give me a list, I'll make my own list, but maybe you'll catch a sale or two.
I didn't catch.
So yeah. So
the key for the agents though is if you're gonna send an appraiser a list of properties, try to send them properties that match the parameters that they're able to use it. Because if you send them properties that are 2,500 square feet in the 1,600, they're not going to be able to use it. Be smart about it,
Yeah.
Send them information that they can actually use, and then that would help in regards to that. And then they'll make their own decision. They'll decide whatever it is whatever the property is worth.
And it's not a bad idea. I know it's there's cost consideration, but I don't think it's a bad idea for a listing agent that has a unique property, say, to call an appraiser and say, hey, I'm thinking about listing this property. I'm talking with the owner, and he thinks it's worth a certain amount, but I think it's worth a different amount to get an appraisal. And say, okay, before I list this property, I'm going to get it, and have the appraiser give an honest, reasonable.
Let me ask you a question. Since that appraisal is to a private party versus a lender, do you have to abide by the same parameters that the lender sets?
No. That's right. I do a lot of that, Jose. And I tell you, look, I'll give you what it's reasonable, and I'll incorporate some of the parameters that we talked about. But I'm going to tell you exactly what it's worth. Okay, and you're not going to be able to use this appraisal and take it to a lender and say, oh, well, see, we got this. No, it's
that might be a more accurate appraisal because of the maybe unrestricted parameters that you may have to use with the lender.
Yeah,
you can actually use it.
Yeah, no, well, yeah, unlikely. No, you couldn't, because the lenders have these management companies that control
it. And they have different parameters. Like what you said, different lenders have different parameters as well too, which means that depending on who you're doing your loan with, may cause the to go down.
Exactly.
And it's not exactly to have it come in. It's just that there's certain restrictions.
Right. And I always tell people that, I said, look, I can go out there and appraise it for your client, but know that if you take it to one lender, it could be a problem. And if you take it to another lender, it couldn't be a problem at all. It just, to start as a kind of discussion between listing a property and some of the potholes you might hit if you're aggressive on the list price. I mean, that's good to know. At least the seller, I would think, would want to know that, there's a potential of that happening. Not that it would, but, I encourage realtors use that method too. So, but you know, yeah, appreciate you bringing me on. It's been nice talking to you.
Thank you, Ray. Thank you, Roy. I keep calling you Ray. I don't know why, but all
I've
right.
been called worse.
Yeah, I appreciate you coming on. I appreciate your time. I hope that this
Yeah.
episode helps the consumers. Our intention is to add value. I believe that with more information and more knowledge, people can make more educated decisions when it comes to buying or selling real estate. So I hope that this video helps somebody out there considering selling a property, buying a property, just understand the process a little bit better, understand some of the intricacies of our business. So thank you so much. I appreciate your time, and I look forward
Good.
to in the future.
Okay, thank you, Jose.